exclusive. Hey, everybody, welcome to this week's episode of The Lumber Word, episode 150. I think that's some kind of milestone. Episode 150. This is one of the last free days, not behind the firewall. We'll just keep saying that, right?
And one day it'll happen.
Someday it'll happen. The 17th of December. We've got a great returning. You were on once before, Alex. We got to get you on more, I believe, right?
No, this is
your first
time.
This is your maiden voyage. Well, Alex Mead from StoneX. Welcome, Alex. It's great to have you on. We had a great dinner with you and your team down in Kansas City at NOLA a month ago, a little over a month ago.
A little over a month.
I think we've got enough goodwill with NOLA now after we bagged on it for a while. By having Kyle on a couple weeks ago, but no, it's great seeing you, Alex.
I think we're in good graces again. Absolutely.
Mm-hmm. So, look at when Alex and I tested it yesterday. He was on a pretty cool trading floor down there. So, what's your day to day, Alex? Give everybody a little bit about what you do and kind of like specializing in lumber. And Charles, I think you do some stuff with him also, right?
Yeah, we do. Every day we talk.
Right on.
Probably more than Alex wants to.
Well, hey, Alex, thanks for taking that pressure off of Greg and I.
It takes a village, Ash. It takes a village.
It does. Thanks for having me.
I miss talking to Charles more often, I mean, he's
Charles is
he is entertaining and adds value also.
He's a Renaissance man. He's good at everything.
I don't know about that. I try.
Ash and I were previewing another podcast yesterday afternoon, and it has something that we're lacking on this one, but I don't think we're going to add it. Go ahead.
What was it, Greg?
Yeah, no, let's just leave it. Let's just leave it at that, Greg. You don't need to go there.
So, Charles, along the lines
we'll put that behind the paywall, Ash.
Of your beef business, Charles.
Yes, sir.
Buddy of mine just got back from hunting in Nebraska, and they used to just euthanize the bull calves because they're dairy calves, they weren't worth anything, and now they're selling them for $1,700.
Dairy crosses, yep, they're ridiculous. Yeah. 250 pounds or $1,700 a head.
It's crazy. Like there's some money to be made in beef.
All I know is my wife told me, she said, we got 16 people next week. And she goes, yeah, we need 10 pounds of blah, 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 blah. And it's like this. And I went, yeah, I think we're going with the chip of chicken, honey.
Yeah. We're definitely, I mean,
no standing rib roast.
Yeah. I'm like, we want what? How much?
Yeah, you can come over to my coffin freezer in the basement and pull some dead meat out of there. There's a lot of it in there frozen.
Yeah, I may go down there and look for a 10-pound standing rib roast and go, let's go.
It's like an archaeological dig looking for meat in that thing.
That's funny.
I just
Alex,
always afraid I'm going to pull out some frozen limb or something.
Well,
that's dark.
Hey, Greg, you're not supposed to say that on air.
It's the Fargo freezer.
This is a family show, Greg.
Hey, time out. Can we give Alex a few seconds here to talk about what he does?
Yes.
Yeah, no, that's perfect. Well, I will say real quick on the cattle market, if you follow feeders and live cattle, they're an inverted structure. So that front month's carrying the premium. And so there is a big supply issue relative to demand. So kind of like COVID during lumber, you had that front month carrying a premium. So
like silver, baby.
We can only be so lucky that lumber gets there in 2026.
Yeah, we can hope. We're currently in a 150, 140% full carry market at -29. So complete opposite market structure in lumber. But yeah, so I work here at StoneX. We're a Fortune 100 company. I'm in Kansas City. We have a big livestock grain desk that trades corn, beans, wheat, and then we have a big energy desk. So I'm the lone lumber broker here in Kansas City. We sit on a big floor. I've been doing this for 12 years now. So ultimately what we do is I specialize in lumber. It's about 95% of what I do. And we deal with the whole vertical food chain, all the way from the producer to the home builder. So we just help people kind of manage risk, talk through strategies. How can we manage an upward risk and downward risk? So that's kind of in a nutshell what I do. Pretty fortunate. At least I consider myself fortunate to be in the lumber industry. It's a fun industry to be in.
So, Alex, people that listen to this could trade directly with StoneX and you, and you kind of offer them a one-stop shop for all their commodity services.
Yeah, correct. I work a lot with Greg Hoot at Westline, so we kind of work together. But yeah, they can call me up, and we can help kind of execute the orders for them.
Just a question for you. Working on a large trading floor like that, are there some people that walk by every now and then and don't even know you're over there trading lumber? Or is it?
Well, I like to socialize, so I always
Yeah, all right.
I always kind of come out and let people know that I trade lumber, and so usually people kind of know what we do here on the lumber side.
Very cool.
Back during COVID, like the whole, like if you told people you were in lumber, they were like, "Oh man, that was like our one 15 seconds of fame," right? Everybody wanted to know about lumber, right? Now, now it's like nobody cares again. Nobody cares.
It's better that way.
Yeah.
No.
It's better that way.
No.
Flying under the radar a little bit.
Come on.
Yeah, Greg, I'm on your side there.
Well, so I was just gonna say, last week, Greg and I were talking. We're like, hey, things are probably going to wind down for the week, but the market's been, at least on the spruce side, and it looks like the pine side and some other things is starting to, the people calling saying, "Oh, I forgot to buy this and I need it like tomorrow." I mean, I'm getting a lot of that. And I hear Greg and they're like saying, I'm quoting for 3 weeks out selling stuff. And then people call him the next day asking him where the orders are, where the trucks are. Right. And I mean, Greg, what do you see on the spruce side? I mean, some items move pretty good. 2x4 9-footers from the low trade to where they're at now. How much of those moved on the Great Lakes Boston side?
$50 to $60 right now from low trade to current trade. In the East, the combination of the extended holiday shutdowns and some additional Q1 announced production cuts has tightened the market enough to I think so. It's not completely widespread, but we've certainly seen a market that was light on inventory and had some need to buy step in. And I think, clearly with January futures a $50 or $60 premium, that's supportive of anybody that wants to basis trade. So yeah, I'm more interested in where the real number is in pine. I see that we've got there again, the futures market there's up $40 a thousand since Charles and I talked a few weeks ago and said, yeah, we got to buy this. And Ashley pointed out to me that wow, you should have bought a lot more of those than you did, Greg. I'm like, hey, be grateful for what I did do.
I think that was the first one I got right.
There you go.
I think that was the first one I got right.
Hey, that's the only one I remember. It's the only one I remember.
Well, hey, look, that's exciting about Southern Yellow Pine because a lot of people in that contract launched were like, oh, this is not going to be a good contract and you can't trade it. And bullshit. It's a great contract. You can trade it and you should. The open interest is going up, but I think we'll have over 1,000 to 2,000 open interest in 2026 on that contract. I think once people get a hold of it and see it.
I think you're right, Ash. I think there's a lot more people that are able to wrap their heads around it. The nuance of it is a little bit different than what was historically done with the deliverable aspect on LBR. But yeah, with kind of the species swapping and the push and pull, give and take across the country, it's going to have to grow in open interest.
Question, Charles, is it deliverable contract or not?
No, financially settled. And actually, Alex, that's one question I have for you.
Yep.
How does that transpire? Now that Matt asked that question, I'll just rip the Band-Aid off.
So
no lobs here, Alex. No lobs.
Yeah, the CME partnered with Fast Markets. It's a cash settled contract, and so the CME does put out a daily print price for 2x4 east side. And when it comes spot month, I think there's 10 or 11 business days. It'll be an average price of each
10
of those
10
daily
days.
settlements.
10 days.
Yeah.
So,
Yeah.
like the current contract in the LBR, it's deliverable. Typically in spot month, obviously there's no limits. Typically the funds get out and it's more commercial participants. If futures is overvalued, typically people sell it. If it's undervalued, people buy it, and you get convergence between cash and futures. There's only one settlement price at the end of the day on the settlement date. The CME is an average price, right? And so whatever, you don't have to get out, you don't have to roll. So if you're long, you can just stay long, and ultimately you'll have a credit or debit based on that average price. Same thing with the short side.
So it's the print price, the average of the print price for the last 11 contract days.
I think 10 days. Yeah.
10 days. 10 days.
I had somebody ask me that question as I was trying to convince him to trade the contract. And I was like, you know what? I got to admit, I don't really know the answer to that question.
It almost settles like a swap going into the last 10 days, right? I mean, off of that. The cool thing about it is if you don't trade physical Southern Yellow Pine, it's the cheapest and easiest way, in my opinion, to get long that product.
100%.
Or to short that product. And you don't have to have trucks showing up without any paper on it for $25 a thousand or anything. You can just get long or short that contract. And I think more people are gonna.
It's also, as Charles indicates, a lot of times, pine mills keep a much shorter shipping file than spruce mills typically. And I honestly think that the pine contract should ultimately have a greater open interest than the LBR contract, given all the factors that we know about that market. I'm going to say, I'm at 2028. That will be a greater open interest.
Yeah. And funds will be trading it.
Well, the one thing that's interesting, and obviously open interest is not very high. It's at 150, 140. But the CME did get 2 market makers to participate. So if you look at that bid-ask spread for the first 3 active contracts, it's within $1.50. So there is a market maker in there. It is tradable. I think the one thing is if you're trying to buy it, there is a premium relative to cash. So it's easier said than done on paper. But it is tradable if you want to actually participate in that contract.
Yeah, Alex, if you look at the volume daily, every day I come in and try to look at the open interest, I think it's going to be up 20 or 30, but there's all that volume is just trading for that day, right?
Yeah.
It's just in and out, and there's like a couple open interest moves up, or some days there's more, but the market maker's doing a good job. He's probably wondering what the hell they're doing, but they're doing a good job. Keep doing it, guys.
To do it until we get critical mass. And the other thing I'll point out is it's a lot. The premium in there is tiny compared to the premium in LBR right now. I mean, So Charles, East Side Pine 2x4. What's the market price today?
12 and longer. Your probably average premium over print is $45.
So from a random links, I mean, midweek printed what? East Side Ash. I don't have it in front of me.
Up 15.
I don't have mine in front of me either. What did it print?
I think it was up 15.
Yeah. So if what Charles is saying, that's a good one to still get long. Except you're getting close to January now. I mean, so
I don't think. Really, January was a trade 3-4 weeks ago. I think you push out to March and the back months, and I mean it makes sense, right? I mean, even if you got long at 420 in March, I mean, for you to buy, and let's just say FOB mill 2 before 16 is $400, right? You got $27 in freight, $12 to unload and load. I mean, you're already over that 420, and that doesn't even include putting it in a warehouse for 3 months. So,
Greg, the number was 363 East Side, so you're talking low 400s to 410ish. Charles,
415. Okay. There was a high trade of 4.25, actually.
What's the story with
the hard number?
Well, East Side printed 363 last Friday, but what is it? What did it print yesterday?
Yeah, I think East Side composite 4-inch was up $15.
Okay.
East Side was 378 last night.
Yeah, there you go. Composite. There you go. Up 15.
378, and you've got January now. What, 400?
Yeah,
401.
40.
So basically, if you bought that whole time strip for as far out as next year, how much could you lock in 4-inch Southern Yellow Pine #2 for?
Oh,
It was
Pretty
sub
400
400.
Yeah,
We're
crazy.
We're doing our predictions at the end of the show, right, Ash?
Yes, we are. We are.
Like, strap yourselves in, people. I mean, this is going to be. There's going to be some fireworks when we throw these numbers out.
Matt, U.S. species. We talked a little last night. What are you seeing this week? Anything surprising? Anything like I got a lot of inquiry today for guys looking for cars.
Yeah.
I don't sell it, but looking at cars of 2x4, 2x6, 8, 9, and 10-foot studs like to Arizona and those places, and Hemfer or Spruce, which Hemfer is obviously going to be cheaper, right?
Yeah, we're like you guys talking about up $30, $40, $50. That's kind of where we are. I mean, we're out into January, like all the cheap deals are gone. We had guys come in yesterday and again today and pay the higher prices. So we know that those prices are working, and we're not, selling it for tomorrow's shipment. It's for like week of January 12th or January 19th. And so these are confirmed numbers in volume. I think studs are actually leading the game right now overall in the whole market. So then, and that's all areas, all species. It doesn't matter, green or dry. Dimension is lagging in terms of like the movement of it, but all the cheap deals in Dimension are gone too, unless you want to buy some 2x6 14s or some 2x4 10s or something that a mill has a little bit extra of still laying around after they sold all their randoms at a discount. And then now they're gone off into like Christmas mode. And so all the things that we predicted were going to happen have happened. We come into December, mills have a week or two worth of problems to deal with. You get to middle of December, they've dealt with all of them. And so now everything's quoted into January, and you're selling for higher numbers, and the availability shrinks. So we're, all these straight 16s and straight 14s and the hard tallies that people want to buy, those aren't quoted. They're just no quotes. And it's more of a scramble now for the buyer. So we talked about this happening, and it's happening. I'd like to see a little bit more upward momentum on Dimension side, and I think that'll probably continue to happen here over the next 2 to 3 weeks. Typically Christmas time and early January is pretty good. You have a lot of mills out, not quoting wood, and so if you're in the office and you've got something that you can offer to the market, a lot of times you just get the offer, you'll get the order by default. And a lot of times you can sort of just name your price and still get the order. So, yeah, I like the market. I mean, like I said, I've been wanting to buy and hold and not hedge. Now that the board's up another $35, $40 from where I bought my shorts out, 3-4 weeks ago, I'm starting to look at it as a hedge again. But it also tells me that that's the direction the market wants to go, right? I mean, like we have some upward momentum building right now, and this might be the first or second inning of it. I don't think we're in the ninth inning. We're just starting to rally.
What's interesting, Matt, and Greg came by the office yesterday and said, "Hey, wasn't it interesting this year? The 2 times we had talk of a tariff or a duty, everybody got super bullish, right? And then the market just broke off and traded down, right? And what I'm seeing now, this is what I'm seeing. Maybe people are seeing it differently. I had a conversation with a guy in North Carolina about buying 104 5/8 2 weeks ago. I said, "Hey, there's a chance that those could be 650 first quarter." He's like, there's no way it'll be lower than it is today. Nobody believes first quarter is going to have higher numbers than we are today because they only see what they're seeing in their business. But it's a big world out there, and it's a big market. And for some reason, it seems that the zeitgeist or whatever out there is, we don't need to worry about Q1. Prices are going to be lower in Q1. And I think that's mentality might be Matt, as you always say, in the inning, the first or second, maybe third inning of changing and realizing that, oh, shoot, maybe we do need to cover some stuff for Q1.
Yeah.
Right. Are you guys noticing any of that?
I am. I mean, yes.
Yeah.
Alex, you deal with, like you in your trading, you're handling the futures business for like all sectors of the market, you said?
Yep.
And do you get the impression that the mills are hesitant sellers at this point because of all of the pain and suffering that they're going through?
Yeah. I mean, I think, you look back at this year and you look at the tariffs and you look at the volatility, there was a lot of opportunity to sell. And I don't think that futures and it's been underutilized. And so when that, crash has already occurred, it's difficult for guys to kind of sell when the move's already happened. And now we're at that seasonal. I think a lot of sawmills look at the seasonal. And if you look at the chart, typically you kind of appreciate into February and March. And so a lot of guys are hesitant to kind of sell right now based off the seasonality. So for me, I think I like the January contract if you're trying to build out an order file, just because typically convergence plays out in the next 2 or 3 weeks. And so one way or another, we're going to know cash is going to move up in 2 or 3 weeks or futures is going to come down come January expiration. But I think from like a longer term perspective, it's tough for the sawmills to kind of come in and lock in a price today.
I mean, selling 570 doesn't really help them.
Doesn't do anything.
I mean, it's like, okay, so we lock in, we're locking in $50 or $60 less of a loss than we're taking, but we're still losing a significant amount of money. That's my big disconnect here is like going, we got another day or two this week, and then the next 2 weeks are, 70 to 80% of the industry will not be working on the 2.5 day weeks. We got a lot of mills that are closed the entire time, if not, substantial time. We come back on January 5th and wow, deliveries, the January expires 10 days later. You've got open interest in January now of what, 8,000 contracts?
Yeah, 7,500. I think it was
7,600.
It was down 400 yesterday.
So, there's just a big disconnect there. And, to your point, Alex, is like, hey, are we going to wake up and on Jan 5th, is the cash market going to be $50 a thousand higher? Or, are we going to have some adjustment? I mean, in my opinion, it's a no-brainer to sell 570 against any inventory you own, or hands down. And if you lose money on that, that's going to be a great start to your quarter.
Yeah. It's funny you bring that up, Greg. I always talk to people, typically, at least not a lot of people that I deal with are never 100% hedged. They hedge a percentage of what they want. And so losing money in your futures account is actually a good thing, because ultimately you're not 100% hedged. But it's tough because every day you get that daily statement, you see how right or how wrong you are. And it's kind of hard to process that. But at the end of the day, if you're hedging properly and you have a correct plan in place, losing in your futures account should be viewed as a good thing.
I have a recommendation for all of those folks is, here's the best way for you to mentally go through this exercise is look at your futures account and what it is, and calculate if the cash position were to move to that price, what effect that would have on the profitability. And conversely, say if futures move down to your cash price, what would that do? And I think, most people, if you're in a 10% hedge, a 20% hedge, a 30% hedge, a 50% hedge, those numbers are going to, it's a lot more palatable to look at it that way than to just go, oh, I'm out $100,000 on my futures contracts. Oh, how stupid am I?
Yeah. And even with that said, you'll still have to explain to corporate why you're losing money in futures and making 10x in cash, and they still won't be able to understand that. But at the end of the year, it'll look good. No, that's a good. Can
we talk about Lennar earnings?
Well, actually, one thing I do want to talk about that. I want to talk about one thing, Alex, you put out a lot, and I really like looking at the Commitment to Traders report. Right, I think it's one of the best reports to look at when you're walking into the casino. Who's sitting at what table, right? And where the chips are, or and why. So when is the government going to catch up? Like, it was still showing the last one you put out, the big non-commercials, the big traders short. It's still the long commercials long, non-commercials short. Who's hedged right now in lumber? I mean, if that many commercials are long.
So I think the first part of the question, the last report came out it was November 25th.
Okay.
And with the holidays coming up, I think towards the end of January is when we're going to get caught up on the COT report. So the 25th came out, the commodity funds, and I look at the long report, options and futures combined.
Yep.
They came out and they have 5,200 positions on the managed money shorts.
Shorts.
Commercial longs have, call it, right around 6,900.
Okay.
And look, go ahead, Greg.
Question. And I'm always interested in like these buckets, how they qualify.
Yeah.
Who are commercial longs?
Commercials are those that actually participate in the lumber. So if you're like you guys, you're involved in the lumber day to day. If you have more than 25 positions, you're considered a large trader, and so you get something.
If I was Texas hedged, I'd be long, correct?
Yep. So
and you count as a commercial.
Correct, and you'll go and fill that report out, and so it's also based upon how you guys fill it out. But historically speaking, if you're involved in the cash, that physical product, you're considered a commercial.
So that bucket's going to include, distributors, end users, like, contractor yards, truss manufacturers, Charles Delatories, those type people.
Beamers.
Do you see home builders as participating in the market?
Yeah, there's home builders that participate, multifamily developers. I think, realistically during COVID, it kind of, the futures mechanism kind of got a lot of attention because they hedge other things, not just lumber, but they hedge interest rates, they hedge other things. And so they were kind of looking at what can we do to kind of manage our budget. And, when lumber goes from 250, 110 to, what was it, 1733.50, that can blow up some budgets. And so I do think that there are more, and the smaller contract size, margin requirements are what, $1,100, $850. So you can be a smaller participant now and actually use the board.
So if you came into 2025 and you had and you were a long hedger to protect your price risk for 2025, and you rolled all year,
yep.
At that average roll, you would have lost between $240 and $250 a thousand over the course of 2025. If you kind of rolled at the average, if you rolled at the best, maybe it was closer to 200, and the worst, closer to 300.
And we thank all of you for that.
We do. We want to thank every one of those people. You folks made my year. Amen.
Yeah.
Please keep doing that.
Don't stop. Whatever you do.
What's the widest the spread got out to? Was it like 80 or 99.50 one time? I think.
I think it's in the 60s and 70s was kind of the best monthly that I saw. Most of them averaged in the 30 to 40 range.
Yeah.
Right.
It usually blows out come spot month, right? Once you get
right,
because the commodity funds roll ahead of spot month, and then they. Come spot month, typically it widens out because it's all supply and demand related.
That's why I'm telling people, right now, selling January, as soon as the funds are done rolling their short position from January to March, there's no bid in Jan. And, it's going to have to come to grips with the cash market.
Yeah.
It's a good thought. Yeah. So I guess my question is like, I guess people are going to stay long. What was the commercial shorts open interest?
Yeah. Commercial shorts, call it 2,000, just under. So,
okay.
Yeah.
I mean, you think about that, like we have the biggest, my next question then is,
they're really dumb or really smart, Ash.
And I think that's how you answered it. Like, this is the first time I experienced these bigger premiums. But Greg, you said during COVID, January, you said there was big premiums one time.
Matt and I, it was, I'm going to say it was the fall of 21. We were in that post-November in between, and the premium to January was like $80 or $100.
Oh, yeah.
And the market went up, carried that premium into the first of the year. The market probably went up another $100, $200, $1,000, and kept that premium the whole time. I was in on the rug every week, had to come in and do that report where cash goes to our futures position, this happens. And if futures goes to our cash position, this happens, to kind of do a hand-holding exercise. And then, as I told Ash, it wasn't on the January contract. I think it was on the March.
I could tell you on print, it topped out on week 24 and then just puked.
But futures fell in like a 2 or 3 day period, like $100 and something, $120. It went from being a premium to the cash market to being a huge discount. And that was the best quarter in the life of my lumber career.
Yeah.
And I still think I lost $1.2 million on futures.
It was hard to explain the futures loss until I told them, hey, well, look at the other side of the cash side of it.
Is that how that works, Matt? You got to tell me about the other side.
When you think about that, think about having explained to somebody $1 million futures loss and really being happy about it.
I mean, you can't explain it because the loss is so big that they're not used to seeing losses that big, right? And so, but then the flip side is, are you used to seeing gains this big either? I mean, we're in unprecedented territory. Like,
but you should
just scale everything down by like 10, like divide by 10 and just pretend like this is 2018 instead of 2022. And then, I mean, you had rookies coming into the business and they'd sell a car of lumber and make $10,000 profit. It's like, okay, that's not reality.
And they're not here. They're not around anymore.
Yeah, that's just not. Anyways, yeah. I mean, we could talk about that, but look, I am curious that I've been staunchly advocating that people buy lumber here for a while, and I'm curious if you guys feel the same way I do going into the first quarter. I feel like I'll just come out and say it. I think we could have a $100 cash rally in the blink of an eye, and nobody would be the wiser because we have so much pent up negative energy. And we've had such a long period of negative drawdown on the sawmills. Okay, so think about it from the sawmills perspective. I always go back to what are the sawmills experiencing? Because ultimately they control the market. And the Canadian complex being penalized with 45 to 55% taxes. We've got the yellow pine guys who a lot of the Canadian guys bought yellow pine assets, have wound down their sales prices to like below cost or maybe barely cost. So there's no money to be made there. And then you have the West Coast lumber people like our company. There's no profit to be made right now. I mean, you might not be losing a lot of money, but you're not making any money for sure. So all of the mills in North America are underwater or break even at best. And you've got curtailments coming in front of us and the whole industry, like Ashley talked about, it's going to be lower in the first quarter. Like, to me, it just seems like we're setting ourselves up for a snapback reversal when you have everything looking so bad.
But we're like the boy that cried wolf. We've been saying this for like months on end. I mean,
people don't think that you can get $100 rally overnight and it might go up 10 or $20. I'm thinking I've seen this movie before. It's not how it works.
Interesting thing, $100.
But Matt, hold on. So I have a question though. I don't think you're wrong as far as appreciation goes, but as far as a print number, right? What kind of premiums are you selling cashwood at right now for January shipment? Like, let's just use an arbitrary number. Let's say print's $300 on item B. What are you selling?
Let's say $35, $40.
But January shipments is the cash market now.
Well, I understand that, especially in your business. I mean, I agree with you 110%. But I'm trying to, I guess my thought process here is that typically, at least in the pine business, when you have mills that precede increases at such a large percentage, there's always a pullback. And then there's a rocket launch, I guess, to your point, Matt. I don't know. I think timing is going to be everything. And I think there's going to be an opportunity in the next 6 weeks. I'm not saying we're going to $300 wood. I think we might stall where we're at, but I don't think you see $100 appreciation between now and 130.
How many mills are quietly quitting down there in the South without announcing it that you're aware of?
Well, I mean, they're quietly quitting that, so I don't know.
Yeah. I mean, like, so no, you can find out.
Charles, should I sell my yellow pine contracts? Should I sell my January yellow pine contracts here?
Well, January, you're getting so close to expiration, you probably want to get into March because
Yeah, you probably want to roll in
it's a
March.
slow. Once it gets into spot, in my opinion, it's not. Everybody opens their Excel spreadsheet with 10 days on it in the average, and they just watch it and they wait for the number to come out every day, and it's kind of set at the end of that prior month where that last day where it's going to go to really, or how much.
I'm thinking I should sell my 401s. Huh?
Again, for everybody listening, that's not any advice at all. Don't.
I think we need
advisor. This is for entertainment.
I think Matt needs to get that edited where he said the sawmills control the market. I don't think anybody at Hampton would appreciate that. Might want to edit that out.
Well, I mean, I don't think the sawmills don't control the market. Nobody controls the market. The market.
Man, I'm kidding, man. I'm kidding.
But ultimately, if sawmills stop making lumber, then yeah, that's going to have an effect on supply.
I agree with you 110%. But here's my question. So from a perspective of us in the South, right? And I think this is kind of an industry thing. We typically have a buy during Thanksgiving, right? Right before Thanksgiving, then we have a year-end buy. And it kind of parlays the first couple of weeks of January, and then it kind of takes a breather a little bit. And there's an opportunity there for you or anybody to buy some wood before the second round of appreciation happens, right? Mm-hmm. This year, we did not have a buy in Thanksgiving.
Right.
We had a buy the first and second week of December because mills are now realizing that, or not mills, but dealers, even, the Lennars and the Pulte's and the DRs have probably had some pretty honest conversations and said, hey, I want to buy OSB at $9.50 a sheet. Go do it. Buy all you can buy, put it in my lumber yard and ship it to me. So now all of a sudden you've got a scenario where these guys, and dimensional too, right? You've got a scenario where these guys are buying well beyond their immediate need inside of those first 3 weeks of January, to where I think there's going to be, the market's going to come up for air. Because I mean, if you're selling anything right now that's shipping the first week of January, it's not going to get there till the third week of January, best case, right? Typically,
yeah, I feel like there's usually like 3 waves. There's one in December, January,
agreed.
Another one like end of February into March, and then sometimes you get an April, May one, and then by the time you get to Memorial Day, it's like, okay, like
let's
shed
hang
your
it
snake skin. Like if you got a bunch of dead inventory that you need to get rid of, you probably should do it now instead of waiting until August 30th. But I think you're right, Charles, about that. There's in my. And
I'm not saying we're going to where we were 4 weeks ago, right? I'm not saying that at all. But this little blip on the radar also gives forward sellers such as ourselves the opportunity to really price in some risks that we haven't been paid for over the past 6 months, right? Because if you get treaters that step into the market late February through March, early April, anything that starts in Q2 is going to have, it's going to be pretty tight if you locked in pricing November, because nobody was paying you that much of a forward premium. So, it's just
and it goes back to Charles that Ashley talked about this last week, how much that business is actually covered. And we think, or Ashley thinks, and I agree with him, that a lot of it's not covered. And so there's more fuel underneath this thing if we get serious. If things start to really clam up in terms of the supply from sawmills, and you're looking at 3 and 4 week order files and thinner inventory at the distribution level. Like if you're a distributor or a wholesaler with wood on the ground and you haven't been practicing diligent hedging strategies in 2025, you got your teeth kicked in. I mean, you just got smoked. And so your boss is not going to let you do that in 2026, or you yourself are just going to say, I don't want to do this anymore. It just costs me money. It's pain and suffering. I don't want to do it. You're coming into a playing field now where there's just less participation on the supply side. And if the number of players disappears and all of a sudden you've got demand, wow, guess what? We have seasonal demand. It's just like too many wildebeest crossing the river at the same place, and the crocodiles are going to feast.
Hey, Alex,
Yep.
November housing starts, I believe, are going to be released tomorrow. Do you have estimate projections?
I haven't seen it. I think, have you? Greg, have you looked at it?
That was Greg's way of saying I've had enough of Charles and Matt's
Yeah.
No, I
banter.
just I thought we'd just I'd pivot.
Yeah.
Yes.
Well, I do have a comment though to Matt, and I would agree. I think a couple episodes ago you talked about 2024 versus 2025 expectations.
Oh, he threw it. He listened to a couple episodes.
2026.
Nice, Alex.
I agree with that. I mean, I think that's a good. I mean, I think people were optimistic, thought the feds would cut. I think now you're probably getting the smaller log deck at the sawmills. There is less supply, so I do think we're going into a different type of market dynamic in 2026. So, yeah, that was good. And then I like the make, sell, and sell, make. So that was.
Yeah.
I never heard that before, Matt. So
I didn't either. That was good.
Just think of Euro mills as make sell or sell make, because they can cut the length of the log in the woods.
Yep.
And then Western mills take these variable logs and just turn them into whatever the optimizer says is the best length and width, right? So I think yellow pine mills are kind of like that too, but I'm not sure. Anyways, yeah, no, thank you.
ChatGPT told me that the estimate for November housing starts was 1,350,000, which just says that they just came up with like what the average is year to date.
What were you going to say, Alex?
No, Charles, one thing I had about the pine that we haven't discussed was the economy.
That you and I haven't discussed.
Yeah, well, I just in general in the market we talked about pine, but I heard SYP like low grade. There's a pretty good bid in the market. So how does that impact the number two? Are you seeing economy or the low grade at a bigger premium than number two?
I mean, it's as far as a print price, yeah, the premium's larger than a number two premium on print, but typically when you have that price compression, 3 moves up to 2 starts getting substituted for number 3, and then typically number 3 resets. But the variable that we have going into it now that we didn't have is we have less utility grade spruce going into plate markets where that was used. So now they're going to use 4-inch number 3 Southern Yellow Pine. So it's going to actually have a little bit more of a utility than it has historically, just because of the lack of supply in the low grade spruce, especially in the Atlanta market on my side of the world. But because if number 3 catches number 2 is going to get a bigger premium, right? Just like I said, high trade on 2 before 16. Number 2 is 4 1/4 that I heard. And if you've got 16-foot number 3, a week ago at 370 or 360 or 350, now all of a sudden that's jumped another $15. They want to be able to differentiate that pricing structure. Now, the one thing I will say is to make, sell, make. One thing that I think, hopefully Hampton brings with them from the Great White West is some planning on how those products are actually going to flow and actually sell order file versus, hand to mouth 5 to 6 day windows, because that really creates a problem, because you have mills that put these huge premiums. And then all of a sudden you talk to 4 different mills and they're like, oh, I can get you one next Tuesday, right? 7 days after you asked for it. And it's like, well, shit, why am I going to pay you a $60 premium if you're going to have it in a week?
Yeah. Thanks.
One of the interesting things when you look at, what you just alluded to there, Charles, is how weak utility spruce has traded all year to the contract grade. And I mean,
thanks for reminding me, Greg.
Well, I'm sorry about that, man.
I just salt in the wound. Salt in the wound.
Well, no, and it just highlights, like how much of that plate business has switched to number 2 pine, and it'll be interesting to see, how that transmits itself as we go forward into 2026. Lennar earnings, Ash.
Yes.
You want to talk about it? You want me to talk about it?
You go ahead, because I don't have them in front of me.
Oh, okay. Yeah. So they kind of got beat up. Their earnings were down, but when I dug into it, their deliveries were actually up 4%. But the interesting thing was their orders were up 18%. And this alludes kind of to the conversation we had last week with SIG about how they're being much more aggressive in the marketplace. Their average margin fell from, I think, 21 to 17%. And as we talked about, there's some of the other builders are not having the same sales success because they're trying to hang on to the COVID blown out margins.
Mm-hmm.
But I think we're going to continue to see in 2026 is margin compression of the home builders, but volumes go up.
Yeah.
Yeah.
I mean, they're feeding the market what it wants, and more power to them. You know, they're going to continue to grow, and they're going to be an integral part to the future of this country's home infrastructure, right? I mean, they're going to become like the McDonald's and the Burger King of home builders. They're just going to have a lot more market share. Yeah, you know, how many $1 million homes are you going to build? Like, you can't build $1 million homes and make 30% margin on them all the time because there's just not a big enough market for that. You know, who can afford it? But the market's wide open for $350,000 and $400,000 homes. You know, I mean, it's that seems to be the area that we need to tap into the most as a nation, just looking forward infrastructure wise.
Yeah. Somebody was telling me, and they said in the 70s, they made a smaller home, and then we need to go back to just making a smaller single family entry home, you know, less square footage to make things more affordable.
Well,
I saw
think they started
interesting,
doing that.
the development that's brand new right behind my house. There, it's a real interesting development. They've got like homes. You know, I mean, what's that?
Sorry, nothing. I clicked on the thing on my phone and it played back. My bad, Matt. I'm not
That's
recording.
fine.
Oh wait,
No,
we are
so
being
like
recorded.
they
We are
built,
being recorded.
There's like 150 homes being built, and they range from like $1.5 million down to like $450,000, which in Portland, that's a starter home because we just have high, you know, like we're a West Coast city, we have high real estate values.
Yeah.
And then they're also sprinkling in a couple of duplexes, which I haven't seen new construction duplexes being built for quite some time. And they're sprinkling them into the neighborhood so that it's not you drive in there and just see a bunch of, you know, townhomes. It doesn't look like that at all. It just looks like a big house, but it's actually divided in half, and it's a well-built duplex. They're going to sell those for like $500 to $525 each. And I bet you that the home platform is at least 4,000 square foot overall. So you're talking like 2,000 square foot, maybe 2,500. I mean, these are big looking homes, nice looking too. And I'm like, you know, whoever the developer is, that's a hell of an idea. That's a good way to take, you know, you're wanting to build $1 million home and dividing it in two. I think the guy, whoever's doing it's smart. So I like to see more of that too.
For sure. You guys want to go into some predictions for 2026? Matt, this was your idea. Great idea, man. Never even thought about that.
Well, the only reason I was going through, I've got like a little function on my phone that just for notes, you know, and I keep notes on things. And so I was scrolling through my notes and I found last year's predictions. And I had last year's predictions. I said that the highest price would be in the second quarter at 650 Chicago on 2 before 2 and better. I only missed that by about 100. We got up to 750, I think. And that the second half deflation into November, we'd get to 450 low. I got close on that one. And then I predicted that we'd have trucking failures and that we would have railroads that want to negotiate and that average new prices would fall on homes. But I don't know if I got that one right. I think they
well,
actually went up.
You're getting there. You're getting there toward the end of the year here. I saw there was the majority of the country just slowly ticking down the price.
I predicted that we would have an increase in euro, which I'm not sure we did.
Euro is down.
Yeah, so that was wrong. And then I predicted better industrial markets, and I don't know that came true. So I was about 50-50 on my predictions. So based on the spirit of what I said last year, I'm going to say high price in the second quarter will be 800 Chicago on 2 before 2 and better futures. I don't know that cash will get to that, but that's my number I'm choosing this year. Low for the year, 500. Again,
Dude,
that'll be.
Did you read my notes?
No, we did not talk.
Okay.
We have not consulted.
Okay.
I believe that the railroads will continue to negotiate and that trucking will become harder, not easier. And as a function of loss of participants in the industry due to immigration enforcement and, you know, clamping down on CDL licenses that we've all been reading about. And I think that it's going to be a year. This is just an observation. I'm not really going to predict it, but I feel like distribution is going to be more important to the market in 2026 than it was in 2025. And that distribution will have a better chance to make money next year than they did last year, with or without their hedging strategies. I just think that there's going to be some good things happening for the middleman that's willing to put wood on the ground.
What do you think the Hemfer market will do, Matt? 4-inch, like equivalent Chicago, 2 and better at random.
I think that the spruce and the Hemfer price would be equalized. So you just figure if I think it's going to get to 800, then I think Hemfer will get somewhere close to 800.
Yeah,
you know, give or take.
Let's say I have a question 5%. On that. I have a question on that. To Ash's point, I think Ash has mentioned it a couple times this year. You know, obviously, Hemfer is a cheaper alternative that's deliverable now to spruce, so on and so forth, right? So, do you think if those two correspond or correlate, as you just described, do you think that composite is going to be drugged down based on the consumption of Hemfer?
No, it used to be, Charles.
Transition?
I think that 25, 30 years ago, Hemfer was considered a weed species. It was like a cheap alternative.
Which is all legal, by the way, now. all weed species.
Yeah, that's true. We can grow that here. It just wasn't considered a desirable product compared to spruce, but that evolution has changed over the last 25, 30 years because the mills that make Hemfer, the ones that still make it better and have better machinery, and you get better product on the outflow. So the quality of product has improved. And then you've lost producers also, so you don't have as many people making Hemfer as you used to. And so now over the last, say, 15 years, the price of Hemfer narrows, pretty much mirrors the price of spruce narrows. And, you know, like what we just came through here where Hemfer was $20 to $30 cheaper is sort of an anomaly. That's just what everybody happened to be running at the same time. And in the meantime, the spruce mills were getting defensive on their quotes. And so
I mean, now based on what you're saying, it's to $20 above spruce. Right?
Well, based on some transactions that occurred this morning, yeah, I would say, Greg.
Hey, just so everybody knows.
I'd say there's some inside baseball here.
The annual average for 4-inch this year so far, 473 mil, so 583 Chicago. The annual high was 579 mil cash print, 689 Chicago, and the low is where we're at now, 380-ish to which is 485 or 500-ish Chicago. So good, bad. I'm going to read. So I said this. And I know Greg is going to do it. This is why it's not going to happen. But Q2, I put 800 Chicago on Western Spruce or on Spruce, and I got 500 on Q1 for Spruce. I put 850 on Hemfer because I think it normally carries a premium as a high, and 500 as a low. And for pine east side, I put Q2 650, Q1 360.
And you're talking Chicago prices.
On the Southern Pine, I'm talking just east side print, and the other two, I'm talking.
Okay, so
I'm
mill
talking
prices.
Mill prices
on the yellow pine. Got it.
On the yellow pine. Yeah, that's my prediction. Who wants to go next?
Yep, I can.
Okay.
Yeah, so I actually have a customer that does this. They send out a Excel doc, and you go through each month, and you random link. So I was doing FOB mill. My high price was 620 in July. So that 730-ish futures in July. My low price was for July or January of next year, and that's at 430 FOB mill. So we'll see if cash can keep appreciating. But I did an average price FOB Prince George at 546. So I just thought, I looked at this year's price. I thought we could have 15 to 20% price appreciation because of less supply. I mean, if you look at the monthly shipments from Stats Canada, we're down almost 1 billion board feet in the last 4 months.
It's a good stat. Yeah.
Yeah. So anyways, I just think it's going to be higher. Obviously demand's kind of the question mark here. But with the commodity funds being net short, we could have a pretty good bump up in futures based off of market makeup. So I didn't do anything for hem fir. I think I saw the high was 595 this year, 395 low. Probably similar to what Matt says. I think it'll be similar to the spruce market. So
good. That's good. Good input, Alex. I like the Stats Canada one. That is down 1 billion board feet. That's a lot.
Yeah. The only thing I would say, and it's not a projection, but I wanted to talk about it, and I know we're out of time, but it's more so the carry market structure. Obviously, like right now, January is $30 below March. Watch that structure change, right? If we can get -20, -10, and we get a more neutral structure, that really, I think, in my opinion, that's a good indicator showing that supply and demand are more balanced, and you're getting into a more equilibrium market. And I do suspect that happens in 2026.
We were talking last show about how that could flip in like March of this year. I think Greg and Matt brought that up. Would they think that we could go, flip the premium discount?
Projection is the structure should ultimately start to change in 2026.
Yeah. Greg, Charles?
I'll do pine. Mine's a lot easier.
Okay.
I'm pretty close to your low, Ash. I'm probably thinking Q1, probably a 370, 360 and 370. And I think March, April is when we finally get lift off. And I think that kind of correlates with everything else that kind of everybody else is saying, right? I don't think we're going to go to the basement again where we were over the past 90 days, but it's really going to be a question of whether we stick the landing or not based on demand. And, obviously some structural things have to change. I think a high on kind of a composite 4-inch number 2 number is probably $50 to $75 under your 650. So call it 575, 590. And then we just keep going from there, because at that point mills are making money, they're happy, and they might actually sell order files so the moves won't be so violent.
Yeah, good. Thanks, Charles. Greg,
what was your pine high, Charles? What was your pine high?
575, 580.
Okay.
I think last year on this, I said an average of $500 on 2 before 16 for 25. I was damn close to it the first 6 months, and then I got smoked in the back half.
So my backdrop is, the expectation for next year on the demand side is, pretty flattish with this year. And so I'm going to say, if there's going to be a surprise, there'll be an improvement in demand, with continued moderation of pricing, overall economy, improving, and lower interest rates. That having been said, for spruce, my low of the year will be the first or second week in January at 405 mil. So that's call it a 515 Chicago. My Q1 high, 650 Chicago. My Q3 high, 750 Chicago. Yellow pine, my low of the year, same thing. First couple weeks in January, 395 east side. My first quarter high at 475, and so I'm not going to sell my my pine contracts. I may roll January to March though, and then my Q3 high on pine isn't much higher. It's only $500. So that's a big big the spread. I got the spread narrowing somewhat in the first quarter, but then widening in the second half again. And I'm kind of with like hem fir, plus or minus $20 with spruce over the year.
Yeah, remind me. I need to follow up the CME to see if the hem fir north is deliverable.
What did you say the high on spruce for the year, Greg?
July, Chicago 650 Q1, 750 Q3.
I'm more bullish than Greg.
I'm saying there's going to be, the high will be somewhere between mid late February and early April, Q2 sell off, and then a new high in the third quarter.
Like, it's going to be fun. I mean, I hope, because I think 2025 was more difficult than 2024. And, but you know, like I still love doing this, and it's just in my blood, right? It's like, you guys understand that, don't you? This is what we would talk about this, whether we had this pod or not. We'd still be on the phone talking to each other because we just do this. It's like, this is what we do.
That's how it all started. Is like we do this anyway. And so, I mean, I think when we originally started, we just kind of did it for ourselves, and then apparently, if you got like kids like watching other kids play video games, so lumber traders like watching other lumber traders hit their head against the wall.
In your career, you've got to have a few people that you trust that you can get other opinions on, right? And you need to have people like at certain different levels of the chain, whether it's mill guys that you trust, or other wholesalers that you trust, or end users that you trust, or people that are outside the industry but have like a really smart financial viewpoint, like your buddy Brian Westbury, something like that. I've got all those people in my life, and then I have people that I really enjoy talking to, like all you guys. And it's just like, this is what makes the business fun, right? Is the personal side of it. It's along those lines. I just want to tell everybody we're done for the year. And so Merry Christmas, Happy New Year, Happy Hanukkah, Happy whatever. Happy holidays from the Beamer family, and I'm going to say a little prayer that we all have a really good 2026, and that you have a great and blessed time with your family during the holidays.
I appreciate it, Matt. And like you always are like
It's
the
first
five
class, Matt.
You're like the five
First
people you
class.
hang out with, right? So this is a shout out to Greg. Since I hang out with him so much, my wife now tells me I don't listen to her very much. So I think that
Is that new, Ash? Is that new?
But you heard that you heard that, didn't you?
Yeah, and secondly, we are having the Sitka USA holiday party tonight. So since I've officially said that, we can now expense that. And Alex, man, it was great having you on. But look, can you tell us? And Charles, I'll circle back to you, Matt. A great job. I don't have to repeat anything you said on that. I echo exactly what you said, and it's been great having everybody on. Alex, why don't you tell us how people can get a hold of you too?
Yeah, email is alex.mead@stonex.com. And then
Mead, like the notebook, MEAD.
MEAD, no E on the end, MEAD. And yeah, you can just reach out. If they want to reach out to you, Ash, too, you can pass them along. But yeah, no, I appreciate the opportunity. It's been a lot of fun chatting with you guys. And yeah, I'm happy to do it again.
Why don't you make it a regular thing, like once every 60 days or something? Because you bring some technical aspects that maybe we don't take into consideration day-to-day cash trading, right?
Just need to invite him, man. Like Alex, we will invite you on as much as you want to come on.
I appreciate it.
And hey, Alex, if you get a chance, it's great. I mean, great having you on today. And thanks again for that was a great time in Kansas City, by the way. You are you're a very gracious host, that's for sure. If the only negative for the night was clearly Wisniewski.
Yeah. It was,
and I say that with nothing but love, right? I say that with nothing but love for my
2 guns with 2 guns.
2 guns with 2 guns.
Yeah.
But Alex, if you get updated information about November housing starts, whether they are actually tomorrow, and whether any estimates on that, that'd be great to see. And I'm going to echo Matt's. I wish all of our listeners, our sponsors, and all of you guys a great holiday season with those that you love. So,
Charles, you got anything to bookend it?
The pleasure's all mine. I'm just I feel lucky that I'm in the presence of greatness once a week. I get lonely over here sometimes.
Love it. All right, guys, we'll have a happy holiday.
Yeah,
cheers.
Merry Christmas, you guys.
Y'all be good.
Thanks again.